I mean, there's anger, resentment, fear at this moment that of a scale that wasn't in 2008, wasn't in 2001. I've never seen anything like it.
So that means we're looking at a pretty sharp inversion on funds rate to tens as well. So you look at just those two indicators alone, and that's telling us that at some point over the next year or so, the U.S. economy is probably going to enter into recession.
Market sentiments are still extremely bearish despite the recent rally in stocks. Raoul Pal, founder of Real Vision Crypto and seasoned macroeconomics analyst, reveals that the risk-off stance is even worse than the 2008 recession. Have you subscribed to this channel? Join the Wealth Supremacy channel today and be part of our community of winning investors.
What we've got is peak freak out because the earthquake happened and everybody's hypersensitive. I've never in my career seen sentiment like this, both in crypto and the stock market.
Really?
I mean, Twitter is so bad. I put up a relatively bullish chart, just marginally bullish, to say maybe the Nasdaq's priced in a deep recession. I must have had 100 comments of anger. How dare I suggest? I'm like, wow. People, I mean, there's anger, resentment, fear at this moment that of a scale that wasn't in 2008, wasn't in 2001. I've never seen anything like it. June was the actual damage, right? That was basically the nuke button to say leverage and crypto, as we've always talked about, don't go together, right? So that blew up, massive balance sheets, Three Arrows Capital, all of them. But one of them was hidden and we didn't know. And that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine, but they weren't fine. So at that point, they were probably $9 billion in the hole. This is not a crypto thing. This is a fraud, leverage thing. I got caught out in MF Global, which was a huge futures broker. And it was run by the ex-CEO of Goldman Sachs, who was the senator for New Jersey as well. I mean, this guy was one of the most powerful people in the world, John Corzine, super famous. And so I have my entire trading funds with them because it's John Corzine. It's MF Global, the biggest brokerage firm in the world. He gets confused and kind of thinks he's Goldman Sachs, takes a huge bet on European government bonds, blows up, and lo and behold, he's been using customer money.
2021 came with unprecedented growth for all asset classes. Stocks, bonds, real estate, crypto. Stocks attained growth of historical proportions, and cryptocurrencies reached their all-time high. With everything looking good, it was unanticipated that 2022 would be so bad after a very good 2021. 2022 has been historical for all the wrong reasons. We've seen inflation reach a 40-year record high, we've seen household debts reach a 2-decade record high, and even national debt has exceeded GDP for the first time in U.S. history. Yet a recession has not been declared officially. Why? Because employment rates are still strong, and because consumer spending is still high. Do the numbers agree that inflation is worse in 2022? For one, the October inflation numbers show that CPI was negative 0.02% in 2008. Well, it's an incredibly high 7.7% in the same month, 2022. The S&P 500, on the other hand, has fared far better this year than in 2022, when it was negative 37%. Same for the Dow Jones and the real estate market. They were all in critical states in 2008. There were no cryptocurrencies in 2008, but gold has been worse off in 2022 than in 2008. So is 2022 really worse than 2008? The answer would depend on what asset you're looking at and how the economic crunch hits the individual investor. But there's no doubt that 2022 has been a year of massive assets decline, and cryptocurrencies have seen over $1 trillion wipeout in the past year. Raoul argues that the case of corporate frauds in trust management is not unique to crypto firms. We've seen this happen in all markets. We've seen clients fund mismanagement in stocks, properties, and commodities. Such as the case of MF Global, the securities company run by former New Jersey governor and CEO of Goldman Sachs, John Corzine, who acknowledged to using customer money as the company's financial woes grew. Regardless of how we see it, this goes well beyond the FTX collapse. 2022 has been an investor's nightmare, and it seems 2023 won't be any better.
that negative equity means that the banks then become massively proactive in not doing any more lending. That was 2008. The collateral went down. So what else do we borrow against? We borrow against our jobs. I.e., you go to the bank or you use a credit card, it's because you've got income, right? You lose that. That's your asset, your income that you generate, right? You can't borrow money. The whole system blows up. You can't pay any of your other debts. In the stock market, in the financial markets, people borrow against bonds and they borrow against stocks and they borrow against all sorts of other elements of wealth. If those things go down too much, then people start asking for their money back because the collateral doesn't cover the loan. And that's the issue that the society faces. So it's at every level here. It can't happen. So if your share price goes down too much, you probably can't borrow money if you're a public company because people then worry, can you pay them back? If your income goes down, all of this stuff. So therefore, I think that, as I said, this is how the world works, is stimulus now in this particular phase of the world. And therefore, looking out 9 months, the probability is, knowing what we know about debt and demographics, that the central bank has not only stopped raising rates, but is probably easing rates to try and balance out. As you talked about, this is what you want them to do, right? You want them to try and just stop the worst part of the collapse and the worst part of the boom. So they'll be doing that. The probability is that they will also be trying to inject money into the economy because there's no velocity of money because these old people. So that's quantitative easing. What does that do? Asset prices go up again. So all roads lead to asset prices going up over time. It's a trick.
We need to highlight the likely chain reaction that would follow the financial stress, that would follow the constrictive fiscal policies in place. One is the bank's response in giving loans. Availability of credit from the banking institution is always central to investments and the health of the markets. In the 2008 recession, the collapse started with massive devaluation of real estate, which were at the time overpriced. Because of the valuation crash, banks had to reevaluate the collaterals lenders had used in obtaining loans. The lack of credit made the real estate crises spill into the investments people were making into other assets as velocity of money dwindled and the market sought a reset. When people can't borrow using properties, they turn to borrowing against their jobs, and this could be even worse. Right now, that is what is happening. We are seeing an astronomical rise in credit card borrowing this year. Credit card balances have spiked up to 15%, which is the highest it's been in 20 years. So what happens when employment eventually collapses, as it is certain to happen eventually due to the Fed's high interest rates, which would shrink credits available to employers? We may be heading for a collapse most Americans are certainly not prepared for. Subscribe to the channel and like this video so it gets to more people. We hope to see you again. Thanks for watching.